The world of cryptocurrencies, tokens, and blockchain is developing at such a fast pace and increasing its customer base that we hardly have time to keep up with it. Just remember this year: FTX's bankruptcy, the collapse of Bitcoin, and the shutdown of America's Bitfront crypto exchange, and so on, and so on, and so on. The list could go on endlessly. As a result, it's correct to state that the life of the decentralized financial system is active and gaining traction. Because everyone wants to stay up with the times, many platforms are bringing new opportunities and innovations. DeFi technologies are increasingly spreading into our lives, because the services offered by such platforms are not only more transparent than those provided by the traditional financial institutions with which we are familiar, but also because they eliminate all unnecessary intermediaries from which their system derives only excessive control. To the list of the advantages they offer, I would also add points such as accessibility, a high level of interaction, since all DeFi protocols work on the basis of one blockchain, cheap financial services, transparency. As a result, the explanation for the crypto market's popularity and growth becomes evident. Indeed, we can now not only trade tokens, but also rebalance assets, issue stablecoins, establish derivatives, and, of course, take loans and lend money, thanks to various platforms. Regarding the latter, this is perhaps the most typical service that is available, and it can be used not only in the bank that we are accustomed to, but also in the market of decentralized finance. After all, several platforms not only make it possible for users to obtain loans without the participation of any sort of regulators or banks, but they also make it possible for users to have some type of passive income, which is a significant advantage. And now, two platforms enter the arena, which have been actively vying for the championship and the title of Best Staking Platform for several years in a row: Aave, AAVE, and Compound, COMP. It sounds like a battle between Mike Tyson and Buster Douglas, Tyson's main rival. Let's figure out what each of the platform's benefits and drawbacks are, as well as which one will win this long-term duel. It's important to note the Compound was founded in 2018, while Aave was founded 2 years later in 2020. Their combined worth had reached over $30 billion as of May 2022. Aave owns 21 billion of them, but Compound only has 9 million of them in its possession. Aave token has a market value of $2.2 billion, while Comp token only has an $800 million market capitalization. Sounds not good for one of them. This raises the question: how is it possible for a company that is 2 years younger to attain such enormous success in such a short amount of time? In order to find the answers, let's compare them according to 5 criteria: collateral, APY, TVL, token performance, and network support. If we're going to discuss Aave, then it's necessary to point out that this is a decentralized smart contract system that is being run on the Ethereum blockchain. Compound, in turn, like Aave, is a decentralized lending platform. Compound operated as a centralized cryptocurrency lending business. However, it has now switched to operating as a decentralized service. In terms of the number of assets offered, Aave offers more variety of crypto assets in its borrowing pool than Compound. Unlike the Compound, which offers only 9 types, Aave offers as many as 23 different crypto assets. As a result, this makes it possible for the platform to entice a significant number of investors who own a variety of cryptocurrencies. The idea that demand drives supply is quite well known, but it appears that some people are still unfamiliar with it. Aave won this round. Collateral is required to utilize lending services on both protocols. The borrow-to-collateral ratio on Aave is 75% and 66% on Compound. This means Aave provides more competitive collateral requirement conditions for borrowers. The score now stands at 2-0. I'll give you a basic example. A user who makes a deposit of $100,000 on the Aave network will be eligible for a loan in the amount of $75,000 if they meet the requirements. At Compound, they could only take out a loan of $66,000. In my opinion, this is a significant difference. And for this round, Aave won. Maybe in the next, Compound will show itself. On both platforms, the APY is different. Because Compound only supports the Ethereum network, we may compare prominent stablecoins accessible on both networks, such as USDT and USDC. For staking, Aave offers a 2.73% annual supply for USDT, and Compound offers a 3.07% annual supply for USDT. For borrowing, Aave offers an interest rate of 3.68% for USDT, and Compound offers a 4.41% rate for USDT. This means that the marks for both services are the same, with Aave giving better deals on some coins and Compound offering better deals on others. The decision ought to be made on the basis of the individual trader's portfolio and the coins that they wish to stake. For instance, if they want to stake USDT, they will receive a better deal on Compound. But if they want to stake USDC, then Aave is the best choice. It seems that this round will end in a tie. Is Compound finally beginning to put up some opposition after all? I'll explain it to those of you who don't already know what TVL is. A unit of measurement known as total value locked is used to maintain a record of the pooled assets that are locked within the ecosystem. TVL is open for public inspection on the blockchain ledger, and analytics websites monitor the data to provide growth reports. TVL Aave is worth $21 billion, while TVL Compound is worth $9 billion. TVL on the Aave network is twice as large. The difference might be due to their support for multiple chains with higher coin offers and quick loans, which attract arbitrage bots to borrow tokens from their pool. Again, Aave shows itself to be better. But when will it end? Maybe next round? The high prices in Ethereum make it costly for customers to join and deposit. As a result, new low-fee chains and Layer 2 solutions were developed. Ethereum Mainnet, Avalanche, Phantom, Polygon, Harmony, Arbitrum, and Optimism are all supported by Aave. Compound may only be used on the Ethereum mainnet. Aave's team has expanded its platform in order to attract customers from other chains while also offering lending, staking services for the same stablecoins. That is, users of Avalanche can stake USDT on Aave without incurring excessive gas prices. This indicates that Aave has an obvious advantage because it supports more tokens over several chains. Stablecoins such as Terra USD, UST, offer up to 15% return on Aave but are not supported on Compound. Aave's dominance seems to be unstoppable. Aave and Comp are governance tokens used in their DAO, Decentralized Autonomous Organization, to vote on proposals. They are not utilized in the payment service itself. Here's a look at the ROI for both tokens over the last 2 years. For the present time, it should be noted that Aave is up 293% since the beginning of 2021, while Comp is up 20%. Both tokens are now declining, which might be attributed to bearish sentiment in the altcoin market. Aave delivered a 1,400% return at its highest performance last year, whereas Comp gave a 700% return. In the end, Aave has obviously outperformed Comp. Is it any longer surprising? When it comes to making a comparison between Aave and Compound, it is arguable that Aave has excelled past Compound in terms of innovation and execution. Aave offers a more extensive selection of cryptocurrency assets and a variety of one-of-a-kind financial solutions, such as flash loans. Despite this, Compound has plenty of possibilities for further development. Compound made public its intentions to develop Compound Chain, a blockchain, on December 17, 2020. Compound Chain will be capable of delivering money market and financial services over numerous networks in a manner that is entirely novel. Compound Chain will be able to instantly link to any blockchain as well as other networks, in contrast to the majority of DeFi exchanges that are now in operation, which can only function on the Ethereum blockchain. This step may, in theory, make it possible for Compound to join digital currencies that are reported to be issued by a variety of central banks throughout the world. Do you believe Compound has a chance to catch up and overcome its opponent, or will it continue to lose against Aave? What else do you want us to compare? Leave your ideas and wishes in the comments. If you enjoyed this episode, please like and share it with your friends. Thank you for your time, and we'll see you soon.